Nope.
All right, we're good on that. Any unscheduled board communications? Good on that one. Any public comment? Good on that one as well. There's no employee personnel issues. No closed session. With that, I will adjourn the meeting.
All right, good. With that, I'd like to convene the regular meeting of the Fire and Police Department Board for August 12th, 2026. Tracy, turn a roll call, please.
Jonathan Lust.
Here.
Lynn Pinnick. Here. Lawrence French.
Here.
Robert Beckwith.
Here. You, can I entertain a motion to approve the minutes of July?
I don't watch it.
French will second. All in favor?
Aye.
Aye. And with my motion, the minutes passed unanimously. I have a amendment to today's agenda on board initiated item D1. I have a scheduling conflict, so I won't be able to attend the conference. So please strike D1, and can I entertain a motion to approve the agenda of August 12th, 2026.
Thanks, we'll make that motion. I'll second.
All in favor?
Aye.
The agenda passes unanimously. No time scheduled hearings and matters. We have two items on the consent calendar. Is there anything to be pulled? If not, can I entertain a motion to approve the consent?
I'll make it to approve the consent.
Full second. All in favor?
Aye.
Consent passes unanimously. And does that approve any of our retirements services?
We had some. There's a bunch of police and there's one fire.
Fire being Devin.
Correct.
Devin online, and does he wish to say anything? If not, congratulations, Devin.
We have Chris Cooper.
Super. Chris online. I'm not present.
Robert Martinez. David Selecki. Or Brian Tweet.
Congratulations to all. There are no disability hearings. We have one staff initiated item to consider and take action on a request by retired battalion chief friend Chuck Tobias, who would like to elect an optional modification to the beneficiary after his retirement.
If I may make a short presentation to the board on this one, you have an agenda in your packet. So unless the board is satisfied with what's in the memo, I can otherwise give kind of a short summary of the memo to you before you act on it. Would you like a short presentation?
Please.
As you know, Battalion Chief Tobias first, something you probably already know, he was employed with the fire department for 35 years. But more important for the requests before you today, Mr. Tobias was married at retirement, got divorced after retirement, and then married a new spouse after retirement. Mr. Tobias wants to select a survivorship option for his new spouse. Well, under the relevant municipal code provision, Mr. Tobias had 6 months, only 6 months from the date of marriage within which to select the survivorship option. He did not make the election in that time period, but he is requesting that the board allow him to make the election now. Retirement staff and this office recommend that you allow him to make the election now. And you might be puzzled by that recommendation because the municipal code is clear on this issue. And obviously one of your obligations is to implement the municipal code pursuant to its terms. So how do we why are we coming to the recommendation we are? Well, a lot of times facts make a big difference, and we think the facts make a difference here. Shortly prior to his marriage of his new spouse, he submitted a beneficiary designation to staff indicating that he had a fiance and provided the name of the fiance on the beneficiary designation form. I think it's reasonable, staff and I think it's reasonable to conclude that that was sufficient notification to staff to put them on notice that Mr. Tobias was contemplating a post-retirement marriage. And then under some relevant Supreme Court precedent, that it is reasonable to conclude that staff had a fiduciary obligation to notify Mr. Tobias of the possibility of suggesting a survivorship option for his new spouse, but more importantly, to alert him to the election period within which he'd have to make that election. That wasn't done. But, and we think in the overall context of these facts that we find somewhat unusual, that they trigger that fiduciary obligation, and also in a sense make it somewhat reasonable to conclude that the information provided by Mr. Tobias on the beneficiary designation form can reasonably be seen as substantial compliance with the election requirement. So the bottom line for us is where staff and myself are recommending to the board to grant Mr. Tobias's request to make the election, but to limit his new election period starting today to 30 days. There was an initial, and it's reasonable to impose an election period. There's an election period in the relevant municipal code section. So that's kind of all we have to say on this. Obviously, please ask any questions you might have.
Questions?
Then you have to, by motion, grant Mr. Tobias's request to file an election, and we recommend that you add to the motion that he has 30 days within which to make that election.
French will make that motion to grant the election with a 30-day period in which he has to make it.
I'll second.
All in favor?
Aye.
With my motion, or with my vote, the motion passes unanimously. So 30 days, Chuck. Thank you. Good to see you. Okay, there are no general discussions. Information only items, there's no new update. Any proposed agenda items for the next board meeting? Hearing none, any unscheduled oral communication? Hearing none, any public comments? Hearing none. No employee personnel issues, no closed sessions. Fire and police is adjourned, and we will convene the regular joint meetings of the retirement boards for August 12th, 2026. Tracy, can I get a roll call? Here.
Margaret French. Here. Lisa Teachout. Here. Alfredo Molina.
Here.
Jonathan Lusk.
Here.
Lynn Bennett. Here. Lawrence French.
Here.
Robert Beckwith.
Here. Q. Fire and police, and I enter to approve the minutes of July 23rd, 2026.
French will make that motion.
Second. Second, Tyler Becky. Yeah. All in favor?
Aye.
And my vote, the minutes pass unanimously.
We have a motion on the employee side.
I'll make that motion to approve the minutes, Fargo.
I'll second.
All those in favor? That passes.
Yeah. Fire and police, motion to approve today's agenda for August 12th, 2026.
I'll make that motion.
French will second.
All in favor?
Aye.
Motion passes unanimously.
Can I get a motion on the employee side?
Make that same motion, Fargo.
All those in favor?
Aye.
All right, that the motion passes on the employee side.
There are no time scheduled hearings matters on the consent calendar. Question, August 25th, if needed. Is it needed at this point?
No, sir.
Okay. Motion on fire and police to approve the consent calendar.
French will make that motion.
I'll second. Go ahead, Lynn.
Lino, second.
All in favor?
Aye.
Passes unanimously.
May I get a motion to approve the consent calendar on the employee side?
Motion to approve, Marvell.
I'll second.
All those in favor?
Aye.
Aye.
That passes.
Thank you. There's no staff initiated items. Board initiated items. C1 to discuss and approve the NAPC investment performance analysis for the quarter ending June 30th, 2026. Goes to Chad, who punts it in.
Thank you, Mr. Chair. I am sharing with you the second quarter, June quarter performance report for the pension plans. I'm starting with this market environment, which is a bit of an eye chart, which shows a large number of different indices. On the right, you can see these light blue and dark blue bars for each of these indices, and you can see a lot of them go very far to the right. Those are all the public equity indices. It's a range of indices for large and small companies across all sorts of different geographies. But almost universally, the dark blue lines show that over the past 12 months, these public equities are up 20% or more. And the light blue lines show that public equities, all these different benchmarks, are up by 10% or more in just 3 months. So obviously something pretty significant happened, a few significant things in the short term. Some of them are part of a continuing trend. These are in the US, very strong earnings results for the quarter. A lot of companies are finding opportunities to surprise to the upside in terms of good performance. A lot of that is being driven by the way they're rolling out AI technologies and able to improve productivity, not just cut costs, but also have higher revenue, just being more productive. That kind of productivity, the excitement and the energy behind AI also has led to some really exceptional semiconductor and other technology sector performance, which has driven not just in the US, but also at the highest performing of these line items is emerging markets, where some really exceptional performance out of some tech companies, particularly in Taiwan, South Korea, have now led, I think we mentioned this last month, in an MSCI Emerging Markets Index. Taiwan and South Korea, two relatively small countries, are now worth more in that index than China, just because of the way that the companies are fed in and just the way they're benefiting from this AI trend. We have seen some reversals going forward for the other trend, which was some really good news coming out of the Middle East. It looked like there were signs of some kind of agreement between Iran and the US, led to oil prices drop, starting the quarter north of $100, ending the quarter below $70. That seems to have reversed itself since then. But it all led to this really strong performance overall. The other areas down below, you see fixed income with very slight increases, and then commodities, where one of the only negative trends for the quarter is the Bloomberg Commodity Index, which was driven by those oil prices dropping significantly that I talked about. But the year over year is still very positive, which means more expensive commodities. So inflation on a top line basis, CPI, is not high, but it is a little higher than where the US Fed and other areas would like to see it. And it is a continuous, depending on what happens to the Middle East and other areas. Let's turn into the executive summary of the total plan. The top line shows total fund performance. Market value as of June breached $4.75 billion, which is a pretty exceptional level. In 3 months alone, it was up 6.8%. And in 12 months, it was up 12.1%. On an absolute basis, those are some really huge numbers. However, other pension plans in the peer group that we evaluate over that short-term time frame performed better. We'll talk a little bit about why. But the key is, despite these short-term gyrations, the long-term performance for this plan remains exceptional, as we talked about in the past. The numbers in parentheses show the percentile ranking versus a peer group of other large public pension plans. In the short term, they are percentiles are high, meaning you're at the lower end of the range, but over the long term, you're in the top quartile pretty universally. Another thing to note, I think I mentioned this once before, if I jump ahead to page 19, which provides more detail about the returns of the total fund policy index and an allocation index that recognizes that you're overweight and underweight certain areas. In general, you're underweight some of the key areas in private markets and slowly working to build up to your long-term strategic level. Again, on the top line, it shows relative underperformance versus other peer groups over the short term and much stronger outperformance over the longer term. And the other thing I wanted to call out is at the time we put this book to rest and publish it for your purposes, we haven't seen all the peer groups yet. So for these up to June 30th numbers, the population we're comparing you against is on the order of 60 different public pension plans. But for the calendar year basis, we're looking at roughly 3 times as many. So this peer group is only a subset, and it's possible that some of the peers that have been able to publish earlier than you in time for this report tend to have less private markets, tend to perhaps have benefited from this exceptionally strong public equity performance. It also means they also tend to be much more volatile, because that's what public equities is about. It's one of the more volatile asset classes that public pension plans invest in. So that's sort of the overarching story about what's going on. You've had some really strong numbers, a few other higher than your actuarial required rate of return. A few other pension plans out there have done better than you in the short term, but most of them have underperformed over a long period of time. Peeling away at the onion a little bit, looking at the total fund performance. Equities is where some of this underperformance has been greatest. Public equity in the domestic, which is indexed, is in line with the benchmark. That's what your index fund is supposed to do. The majority of the underperformance has been in the international equity composite, as well as in private equity when you compare it against public equities plus a premium. Because again, this is the story of public equities have just been so strong because of the factors I talked about. When you compare private equity to other private equity plans, that's the secondary benchmark, MSCI Global All Private Equity, you over most timeframes have actually been outperforming. It's just the private equity is lagging the public equity benchmarks. Turning back to international public equity, where you've underperformed, you have a few managers that have not participated because of specific stocks they've selected. And a few of them, it's down to like not owning a Korean semiconductor company, SK Hynix, which that performance was so exceptionally strong. Not owning that particular stock over the short term makes some big differences. NAPC, working with your investment staff, has been working on a project for some time now about trying to bring greater diversification to the alpha sources in your international equities. We've been interviewing other managers. We think that by adding an additional active manager or two, we can find opportunities to make a more consistent set of returns and hopefully outperform more frequently and have less of these sharp drawdowns. And you'll be hearing more about that in future meetings. Turning to fixed income, we've got some pretty consistent outperformance out of from both Dodge and Cox and PGIM versus the Bloomberg US Aggregate Index. Private credit, again, in the short term, we're seeing some underperformance, but long term, both in the private credit index and then in their peer group, we're seeing outperformance because of the various managers. Now, both private equity and private credit, these are time-weighted performance numbers. When you're evaluating performance of individual strategies, we like to look at internal rates of return and we like to compare them against a peer group of other similar strategies that all have the same vintage year. That's the right way to interpret them because there can be widely varying results early on in some of these private markets where they're incurring a lot of fees but not seeing the performance. Performance usually pays off later on. On the real asset side, private real estate, you have some slight decline in 3 months, but some positive numbers over a long time frame. That's an improvement from that trend we saw just a few years ago when the increase in interest rates led to some really sharp negative returns in real estate. Real estate seems to have found a stability and is now just the income it's earning and potential for recovery in the future. It's starting to see some positive returns again. And this is a great diversifying asset class. It tends to zig and zag at different time periods relative to stocks and bonds, which is why we own it. The private real estate is these range of different strategies. And then we have the core real estate, which are the difference between these two. The core real estate is generally these strategies fully leased up properties and is just managing them in order to earn the income. It's sort of your steady, consistent income return. On the private real estate composite, we tend to do more non-core strategies where they're trying to add value. They might buy some properties that needs a renovation or need to be re-leased up and those sorts of things. Over the long time frame, we expect higher returns out of these non-core strategies, but in the shorter term, they're not earning as much income because some of the, they're not fully leased up or they're incurring the effort to do it. But that's why you own a little bit of both. And then finally, your infrastructure asset class, which you've got some core investments, and now you're starting to layer in some more specialized strategies. But here you've got some double-digit returns year and over the past annualized over the past 3 years. These are some strategies that have benefited from some of the inflation because a lot of times their income is actually tied to inflation in certain ways. Cash, and then the opportunistic composite, where we're looking for opportunities that don't quite fit into any of the other buckets. On a 1 year basis through June, this relatively small opportunistic bucket is up almost 30%. So that's the good kind of opportunity. That's the way I look at it. Finally, I wanted to show you this Sharpe ratio ranking. So a Sharpe ratio is a measure of risk-adjusted return. Again, your risk-adjusted return is underperforming some of the other peer groups over the past 12 months. Then smaller peer groups selection, but over the longer time frames, your risk-adjusted return is very, very high. If I dial back to the executive summary, we show return and risk-adjusted returns over 5 years and 7 years in detail. And here, over 5 years and 7 years, your 6.9% annualized return, your 9.2% annualized return over the past 7 years. These are some exceptional numbers. Your standard deviation is lower than your peer group. And in fact, at least over the 5 years, is lower than your policy index as well. So you're getting really strong returns with less volatility. That leads to this top quartile performance in terms of risk-adjusted returns.
Question. The exceptional performance, what percentage would you say our investment team, Rob and Chad, have contributed to that?
I think you've got a high-performing group that does some exceptionally good work of evaluating their current managers and new managers, thinking about the asset allocation as well as selecting managers. So I'd say it's high. We try to contribute too. A lot of times they aren't out there looking at every manager that comes through. They use NABC's 70-person research team as sort of the funnel. And in most cases, they let us do our work to select a large number of managers that we like a lot, and then they select among those. A few times they go a little bit off piece, but they
Reservation.
and they've found some good strategies that way as well. So I think it's pretty important. That concludes sort of the comments I was planning on talking about at the June performance report. Are there any other questions?
Nailed it.
Again.
For some current trends right now after June that we can take into consideration moving forward to the next quarter?
So what's happened since June? The ceasefire is sort of broken. Although we don't have the activity as high as it was at the early parts of that war, it has led to higher energy prices. A trend that started in this June quarter and is continuing is that the markets are starting to expect the Fed to not lower interest rates as had been planned, but to actually start increasing them because, but that's a moving target. Another bit of information is that the real GDP growth for the June quarter was announced on I think like July 30th. Economists were expecting the real growth of the US GDP for the quarter to be on the order of low 2% range. Instead, it was 1.5%. So we're seeing slower growth. Other trends, the companies, the corporations still are reporting really strong earnings. So there's this disconnect between the strength of the economy and the strength of the corporations. And then finally, those high growth AI driven stocks, some of them pulled back sharply in the month of July. At the same time, value stocks, so think industrials, less popular stocks, were exceptionally strong. The range between value and growth was in value's favor more in that 1 month than we've seen in any 1 month for a large number of years. So again, we're seeing this sort of whipsaw performance back and forth. I don't say you see a strong trend, but you're seeing reversals and just we're trying to grapple with a lot of new information.
Cool. Thank you.
Sure.
One side.
Motion required to accept. Please, Byron, please.
Motion.
French will second.
All in favor?
Aye.
And with my vote, it passes unanimously.
One side.
I'll make the same motion, Marvell.
I can second. All those in favor?
Aye.
Aye. That passes unanimously as well.
Thank you again, Dan, and investment team for your performance. Moving to C2, discussion and value of the C1st ad hoc committees.
That would be me. I apologize, I can't get my video working, but it's probably used for error, so I apologize. I don't have face on the screen, but so I've had the opportunity to participate in the last 2 ad hoc committees, and I enjoyed the process of the committee work. I felt like there was a lot of frustration on my part, and I think most of the board members, when it came time to present the results from the ad hoc committee, there was I felt a lot of angst. Some people felt lack of transparency. And I really got to thinking about it. And I think when I look back on the presentations we made to the boards, part of the process is maybe that we don't have a process. And maybe that's the problem is we need a defined process of, okay, the committee is meeting. What are the goals? What is everybody agree the goals of this subcommittee is? Subcommittee meets, and then there's a formal process for reporting back to the joint board on what was discussed and decided upon in the ad hoc committee. And I'm open to discussion of what everybody thinks. I would be willing to take on putting together a rough draft of some sort of policy process guidelines moving forward to make these discussions more productive. If the joint boards agree with that, I think it'd be counterproductive to form an ad hoc committee to look at this. I think maybe if I start out or somebody else, if someone else would rather do it, starts out looking at maybe creating some sort of formal process or guidelines, and then everybody can have input from there. So that's just my thoughts. I'm open to anything. Speak to me.
I'm open to that. I want to create some type of draft process for us moving forward. I think, got to your point a couple of times. I feel like I've been surprised by, I feel like we don't have a lot of input as we're not on the committee. So we can kind of bridge that gap a little bit where we're not
blindsided or surprised by the outcome of what was coming from the committee.
Just going to weigh in from a legal perspective. There are certain rules that I'm sure you're aware of that make a committee compliant from a Brown Act perspective or not compliant with respect to ad hoc versus standing. So if Trustee Bennett, you'd like input from council in preparation of this proposed policy, and maybe also consider the value of standing committees on certain topics. One of my observations coming in has been that you have a lot of policies, and it's not entirely clear to me how those are reviewed methodically in order to be able to make sure that they're up to date and somebody's on the task of bringing them back to you every 3 years, for example. And so having, say, a standing governance committee that meets maybe twice a year is one way to address that. So the idea would be if you were to think about this as an ad hoc committee on certain discrete limited items, which is the only way you're allowed to have one, because they don't need to comply with the Brown Act. And then a standing committee, one or more, however I know there's potentially a history to this that I need to learn more about, but then you could maybe address two points at once.
Sure. All right.
And I'd be happy to help in consultation with Russ, of course.
Okay. Thank you. So this, so that's good to know.
Of course, it'd be helpful to know the actual attitudes of both boards. We've heard from Board Member Bennett, heard from Vice Chair Neufeld, but we're not sure where the boards are. That's just.
Well, I would say the term feeling blindsided. I think that's the point of the committee, is that we're not allowed to discuss with more than one other member. And so there really isn't like, Lynn and I meet in an ad hoc committee and we come up with an idea. I can't call you or Larry and say, hey, this is what we're thinking. What do you think? Because that would be a violation. So I don't know how to get around the feeling, because it wasn't until recently that I don't remember very many ad hoc committees at all. It wasn't until just like the last 2 or 3 years that we've had these ad hoc committees, because usually it's just done in the boardroom and it's been quick and easy, and there hasn't been. So if there's a feeling like there's some lack of transparency, I don't know how to get around that, because it's just like, I think there would be a higher trust of, forming an ad hoc committee, what's in the best interest, they come back, make the recommendations. I wouldn't consider that blindsiding or not being transparent. I would feel like that's just following the law.
I could weigh in. I think that I've obviously had a lot of concern about the transparency of the ad hoc committees. And I think, Lynn, I really appreciate and trust your approach. I did have the opportunity to work with you in the past on ad hoc committees, but then was removed by the chair as per his discretion per our policy, or his responsibility per our policy's prerogative. But I think where I certainly felt surprised was when a recommendation came back with a very brief report, and as Q&A ensued, and this has happened more than one time, the sentiment that was not the sentiment, the actual comments that were received was, the ad hoc committee has already looked at this. We've taken it into consideration. This is our recommendation. Read what was there. And I even said, but you have additional information that you didn't include in the report. You actually had it. And at one point, Lynn, you even handed it to me, which I really appreciate. But then I was accused of not doing my own homework before I came here. But isn't that the reason we have the ad hoc committee? And I was asking questions that you obviously did have the answers to, but it wasn't included in the report. So I do feel like there's a better approach and a way that everybody could feel that they have all the information that they need, and also the ability to ask questions when they don't, without feeling like, I was being attacked, or that's probably too strong of language, that I was being, that my questions were not welcome. And, I'm just a very curious person and also feel like it's part of my fiduciary responsibility. So I'm going to keep asking. But Lynn, I do trust, not just your approach, but I trust the impetus for why you brought this forward. And I certainly would appreciate any advice that you could provide and work with the attorneys. I think that's a good idea.
Yeah, and I certainly didn't bring this up to start rehashing those old feelings of frustration, Richard. These are two great examples of why I think we need some formalized process, both upfront. Okay, here's the charge of the ad hoc committee. Here's what we're going to do. Here's the guidelines of what the expectation is. And then here's how we present it to the board, and then open it for discussion. And I mean, there should be open, good, transparent discussion about any of it, right? But it needs to be done in a process where it's just not people pointing fingers at each other and getting frustrated that they're not getting the answers they want.
Obviously, there's lots of different ways to create a policy that fills the needs of both boards on this delicate issue. But to the degree you're going to continue to have ad hoc committees, as part of the policy you're suggesting, Board Member Bennett, there could be a section on what happens when it returns to the board. You don't have to you could have like a council thing. It's introduced at meeting one, and then there could be requests for additional information at that meeting, and then meeting two a month later, for example, it could be voted on. Now, whether that would address any of the issues you're encountering is up to you. Just seems like that's one idea that might assist the boards in their consideration of the reports from ad hoc committees.
Can I also just make one other observation or comment? I appreciate the suggestion that maybe we should consider a governance committee, which is a standing committee subject to the Brown Act. I would really appreciate that, because then obviously I could attend as a member of the public, and not, even though I could not be appointed to such a committee, I would imagine. But in any event, as for one board member, I think that is just, play on words, good governance to have a governance subcommittee, and of course we volunteered to serve on it. That is so, the chair so chose to appoint me. I think that's a good idea.
That would be a standing committee. That's not ad.
As of right now, we have 2 ad hoc committees. Right. That's lost track. It's 2. We have the executive search committee and the compensation.
Yeah, and I think that the nature of the ad hoc committee is only formed until the work has been completed. And then, so I don't know if we do have a standing. The only one that I think we have is the fiduciary governance one that I think was supposed to convene, but we haven't.
Oh, yeah.
So that's the only one that I'm aware of, but
Okay.
I think the executive search was not formally disbanded, but
Yeah.
and the compensation, kind of like after the committee made the recommendations, maybe we should have made a formal announcement that there was no reason for the ad hoc because it did perform the work. But, one of the things that I noticed in the time that I spent here is that the rules say the chairs have the authority to form the committee and appoint the committee. Well, out of a board of 5, that's only one other person. So it's really just 2 people meeting. Well, clearly you could meet with somebody else and form your own committee, and it won't be official, but you guys can come up with an opinion in common, and then there'll be a swing vote between what the committee recommends and what 2 non-quorum board members have decided, and then there'll be a 5th vote. And I think that that's kind of the direction that the culture of both boards have been recently, is that there's been differences of opinions, and then there's a magic swing vote that goes one way or the other, and the people that don't get their way get upset and feel like there's not transparency. They didn't get a fair say. But it really boils down to, we're a very small board, and it ends up being one opinion versus the other. So who has the majority of the votes? And oftentimes the ad hoc committee has been successful in the recommendations and the people that would have disagreed aren't happy with the results, and then there seems to be tension.
Yeah. Yeah, I think my concern was last couple of months, I think the executive committee and then the conversation, like that kind of blended together. I felt like, well, that's where I said blindsided. So I feel like having that separation and understanding what the expectations are for each committee will be critical moving forward. So I feel like, we had an executive committee item and that turned into a compensation item. And that was where I was like, whoa, but that's not what was laid out on the agenda.
And I'm sorry, and I just want to say for the record, I'm not upset. You accused me twice of being upset because I didn't get my way. And that's not at all the case. I was frustrated for the lack of information. And I will thank Lynn for taking the time to step back, think about it, and bring the conversation to the table. So I think I respect and honor her suggestion, and I would never be upset for not getting my way. In fact, I know I've said multiple times on the record that although I disagree when the board makes a decision, I'm with the consensus, regardless of whether my vote was the prevailing vote. I've said that multiple times and I stand by that.
I think we're moving in the right direction. I mean, I support what Lynn is trying to accomplish, and I mean, just the conversation that we've had here has been productive. And I know Lynn said she didn't want to rehash like a lot of this stuff, but I think it's good. I mean, you guys are getting it out of your system, and this is what it's all about, right? And hopefully, this is the objective as a whole. If this does happen, I mean, so hopefully you do follow through and something comes of this, because I think there is a need for it. I think that instead of hashing it all out here, like moments before a vote is supposed to happen, or maybe it just kind of allows things to go over a little bit more smoother, in my opinion. But I do see that there is a need, so I support that idea.
Is it possible to have like a workshop with the committee, or would that be considered a special meeting if we were to do that?
And again, the lines are standing committee versus ad hoc. Yeah. Standing committee, Brown Act, but certainly a standing committee could have workshops called Brown Act. Ad hoc committees, you mean in the sense of workshops inviting other board members or inviting members of the public? I think the ad hoc committee has the discretion to do that, subject to Ashley's comments. It's really only been since December 2024 that we've had any ad hoc committees at all. We had, the initial one on executive compensation, where we're really zeroing in on what was allowable under the salary resolution. And that one without formal termination kind of went away. We had then a successor ad hoc committee on executive compensation. We had the ad hoc committee on the RFP for legal services. And I forget what other ad hoc committees. It's a relatively recent phenomenon. So now we're getting experience under how that's been handled. So I think it's a wonderful time for your comments, so that if we continue to have them, whereas for the prior 3 decades before that point that I'm aware, we did not need ad hoc committees. But times change and needs of the boards change. And if we envision having further ad hoc committees, certainly seems appropriate. And we also, of course, could have standing committees along the line that Ms. Dunning just mentioned. But if separately and apart from that, if the boards are interested in continuing to have ad hoc committees, then again, at the pleasure of boards, a set of ground rules and or procedures could be set forth.
How about an easier solution with an educational session or a workshop for the entire boards in joint session on those topics from council? Good ideas, good practices, potential changes, things like that. Then make a decision on what to do about the ad hoc committees.
That's a great idea. I like that.
Council be available for doing so?
Absolutely. And I was going to say workshop is a Brown Act that has to comply with the Brown Act. So I think that's a perfect solution to do it as a joint board workshop.
I like that.
I think that's a good idea. That's a good result from your question.
Commission that forward.
So we'll do that instead of me.
How about first?
Okay,
So just in between.
that's good. Yeah, I like that.
Educational session from council on what they've seen in other boards, what's available, Brown Act implications, and then the joint boards can take action on ad hoc going forward, especially the governance committee going on forward. That sounds
Good. It's out right now. I realize I don't know what I don't know. As I think a lot of this.
That's okay. We make it up as we go along too. So that's-
Well, you have a staff and you should feel free to use staff rather than having to do things yourself.
Yeah.
Unless you want to do things yourself.
And typically from a governance perspective, it's better to have the drafting come from staff or your advisors. You do this every day. And then you provide oversight, comment, requested edits and that sort of thing. So in my experience, that's a good workflow in terms of responsibilities. We could do that as well as we think about the presentation of various models.
We'll work with council on making sure that gets to use.
Any further comments?
You know, some inputs item?
Yeah.
Okay, that concludes C2. We'll move to general discussion D1, retirement administrative report.
You have your report in front of you. There's no real updates or changes on anything on there. Are there any questions?
Nothing from fire police.
Thank you very much.
Moving to D2, discussion and action regarding draft ordinances pending before the city.
Some developments I'm aware of. Well said, yes.
Questions from fire police? Hearing nothing from police, we'll move to D3, report by legal counsel and legal actions and updates.
The main thing is the transition and subject to comments and corrections and criticisms from Ms. Dunning. I think we're engaging in a good, healthy, helpful process, and we'll continue to do so.
I agree with that. Thank you. It's been very collaborative.
Questions, comments, concerns? Hearing none on fire, please. Okay. Moving to D4, discussion of Lacera versus LA decision.
So Mr. Ricade has asked that I kind of lead on this, and I'll just report on a couple of key aspects of this decision that I know a number of you were following. This is the California Supreme Court's decision that came out on August 3rd that addressed or resolved for the moment a dispute that's been going on for many years between Lacera, the LA County Employees Commerce Association, and the County of LA. The decision was 4-3, so it was sort of a narrowly decided, narrow majority. And it's a very lengthy opinion. It's about 86 pages in the current published decision, and there's a dissent of 44 pages. So a lot is in there. I'd say that a few things stand out to me, though, that I think are worth mentioning. One is the decision is very strong and impactful in its description of what plenary authority over administration of the plan and investment of plan assets means. It makes it clear that public retirement boards in California have independent and extremely important responsibilities in that regard, as to your fiduciary responsibilities. It discusses the sole and exclusive authority that you have over actuarial services that are provided, which are the way in which you determine contributions that are due to the retirement system, and it spends quite a bit of time on that. And I think importantly, it also discusses the provision in the California Constitution, which is Article 16, Section 17, Subdivision B, that says, among other things, to minimize employer contributions. And what it says about that is that is a duty to the members, fiduciary duty to the members to minimize employer contributions, which is consistent with fiduciary duty generally, which is it's a single duty owed exclusively to the one to whom you owe it, which is in this case the members and beneficiaries of the plan. So that was big picture on fiduciary obligations. The questions that were posed to the court in the case were whether the constitutional authority over the management of fund assets and delivery of benefits extends more broadly to empower a retirement board to unilaterally set civil service classifications and salary levels for the system employees. So that was question number one. Question number two was whether, apart from the Constitution, whether there was something in the law that applies to that system, the statute that applies to that system, which is the County Employees Retirement Law of 1937, that separately grants county retirement boards this unilateral authority to determine classification and compensation of retirement system staff. And on those topics, the court concluded that the relevant constitutional and statutory provisions create a system of cooperative responsibility between retirement boards and governing bodies on issues related to employee classification and compensation. They rejected the argument of the retirement system that they had a sole authority to make those decisions. And that they could mandate that the counties adopt them. But it did note that there are statutes within Searle and in other state law that permit some of the retirement boards, so some of your peers have specific statutes that allow, that make the retirement system employees, or at least a portion of them, employees of the system, as opposed to, say, county employees or otherwise. And then it talked about some really important general principles of engagement on this topic. And I want to go through those briefly because I think that they're important. First of all, they stated that there is an obligation on both sides of this discussion, the employer and the retirement system, to work reasonably and collaboratively. So it's a two-way street, to be reasonable and collaborative. They also noted that this topic allows for decision-making that's informed by, and I'm quoting here, the retirement board's specialized expertise and the supervisors, so they're talking about the board of supervisors, obligation to operate the overall civil service system as the Constitution and applicable legislation requires. In other words, both sides of this discussion have important responsibilities, and noting that retirement systems will have expertise in understanding what is needed to do the necessary work of the retirement system. It says specifically what work is, quote, necessary and the staff needed to do it are properly considered to fall within the retirement board's authority over system administration and service delivery. And that the county board of supervisors, because that's what it is at issue in that case, isn't free to, quote, arbitrarily ignore or override a retirement board's reasonable decisions about the staff it needs to operate the retirement system and manage its investments effectively. If the county unreasonably rejects the retirement board's recommendations, preventing appointments that are required to accomplish the necessary work of the boards, judicial relief is available by writ of mandate. The court actually went through remedies that are available in the context of disputes, and they noted that mandamus relief is available not only to challenge the merits of particular decisions, but also the process by which a decision is reached. So one of the issues that underlay the controversy that led to the Supreme Court decision had to do with the county not processing requests in a timely way, or sort of, taking them off agendas or whatever it was. And the court made clear that both the substance and the way in which you address or don't address the substance matter. And then they went back to this collaborative scheme notion that it's supposed to be something where there's a context where there's cooperation, and they say so that the parties will engage in meaningful discussions in good faith. And that deliberative process is essential for a county to make an informed exercise of its discretion. It contemplates that the Board of Supervisors will give due weight to the retirement board's explanation of why a different salary or classification is appropriate in light of the complexity of the tasks involved and the compensation required to hire and retain particularly qualified employees with specialized skills. So I think that part of it, those sort of silver linings to a decision that came out in a way that was not the way that many retirement boards hoped, are useful as indicia of the path that the courts expect to be followed by all who are involved in these conversations around compensation and classification, where you don't have a separate statutory scheme that takes the retirement system out of the framework of the county or, in other cases, cities' jurisdiction. So that's what I have. I'm not going to go into the dissent because I don't think it's particularly relevant in the context of a discussion about what the decision means, because the decision is the decision of the majority. But there is a lot in the entire opinion that's of interest to nerds like Russ and me who like to read that stuff, and perhaps you as well. Happy to answer any questions.
Are we?
Or if you'd like to make any further comments, yeah.
Ask your questions of Ashley. I just have a few supplemental comments. I'll jump in.
Please.
First, despite the amicus brief that you were parties to requesting the court to at least devote a footnote in its 86-page majority opinion to the situation of the retirement systems of charter cities, the court did not do that. Unless I missed something in the enormously lengthy opinion. So in one sense, this only deals with the retirement system of charter counties. But unfortunately, the rationale of the main structural elements of the opinion of the majority might rather closely, or at least I would say rather closely, to the context of the retirement boards of charter cities. But formally speaking, the opinion did not address the status of the retirement systems of charter cities. The other comment is the dissent was 40 pages. And when I finally got to that, I was hoping, they won't, they're going to mount their own attack on Prop 162 and maybe disagree with the majority. Alas, that was not the case. The 40-page dissent only dealt with the second element that Ashley mentioned, namely arguments under the county employees retirement law, and it didn't devote a sentence to Prop 162. Therefore, the dissent did not contest the majority's interpretation of Prop 162. So that's it. The last thing is, as Ashley very aptly noted, the command of the court to have both plan sponsor and retirement board to operate collectively, the plan sponsor to listen to the specialized knowledge of the retirement board. But it ultimately comes down to that very difficult test of it has to make a reasonable determination, which doesn't mean they have to agree with what the retirement board has proposed. But it also language that doesn't say the council can just blow it off, or the council can, with the retirement board, provides documents, research, information, all indicating the reasonableness of the request on a job class or request for a modification of salary resolution. The city has to reasonably evaluate that and reasonably come back, if it's not going to approve it, reasonably come back with some articulated argument. And we can just remember back to the city of Fresno context with respect to recent situations that we're all familiar with. No point in going through that now, but there is some power in this decision, in the majority decision, that may prove to be relevant here.
I would just add on there for a second. I think the discussion of Prop 162 in the majority opinion is stated broadly enough with respect to the powers and responsibilities and authority over certain aspects of the plan that it should be understood as applicable to all public plans in California. I think it is very pertinent and not helpful to a city plan that the dissent said they thought Searle gave this authority to the county retirement boards, because that doesn't advance the arguments that were made right by the city, by the amici at all. But that said, the points made in the majority decision that I went through, I think do apply to you in a good way in terms of certain aspects of it, not the ultimate conclusion that rejected the unilateral power argument that was made by the retirement system, but more broadly.
I absolutely agree with that. I just wish the darn court would have dropped a footnote or something, because formally it's not addressed. I think that Ashley's point clearly applies. By the way, and this is inside baseball for us retirement people, there are some retirement board. The majority court, I hope Ashley agrees this is fair, looked at the constitutional status of charter counties and, of course, the constitutional status of charter cities, and looked at the constitutional status of civil service commissions, and also the constitutional status of Prop 162. But it was at that level of titanic icebergs crushing each other, and the court so dealt with that constitutional provision versus other constitutional provision. Well, there are retirement boards in the city, retirement systems of transit districts. Transit districts do not have the same role in the California Constitution that charter counties do and charter cities do. So there's an opening for those boards to claim unfettered power. But I know that's sort of a niche topic, totally irrelevant to you.
I think the court made pretty clear that if things can't be done collaboratively, legislation is another route. And that is exactly what happened after the Wesley decision, which was the sort of the counterpoint to the Lucero decision of the Court of Appeal. State plans got legislation to compensate their executives in the manner that they deemed necessary. Sorry, I'm just through the chairs.
So the one comment you made where they made it clear that Board of Supervisors, City Council can't block positions that the retirement system feels like they need to, they can't take it off the agenda. They can't. What's the ramifications for that for our DCIO position we're trying to get?
Right. They have to be procedurally fair and reasonable. And so I think this is a sort of a new framework for being able to articulate the responsibilities on both sides that can be in a collaborative way to discuss moving forward on initiatives that the boards have. Sorry?
The employees board has just lost a quorum. So This is, I didn't mean to interrupt the discussion. If you keep going.
Wait, there's 3 or 5.
No, but it takes one employee member, and Tyler's not here, and Alfredo's not here now. So there's no quorum on these. So we can continue this discussion. It's just the next item.
For the restroom, maybe?
His bag is still here too.
Yeah, I don't know if he's said.
Or
that list of questions.
she's probably on his cell phone, but if somebody wants to call him.
Are we allowed to ask questions right now or do we?
No, you can keep, it's just you can't take any action.
Okay. Is there anything in the Fresno charter or muni code that we need to reevaluate based off of this decision, or are we?
Well, I leave that up ultimately to Ashley, but I put it forward that there's some alternate grounds, both in the charter and in the municipal code, perhaps advance some of the same arguments. But I think I also expressed the far stronger argument was going to be Lacera if it came out the other way, which of course it did not. Now to look closely at the charter and the municipal code I guess what I'm really saying is that should be looked at again in the context of the Lacera decision, now taking the Prop 162 element, or at least moderating the scope of Prop 162 and maybe seeing what's left of 162 plus the language in the charter, plus the language in the municipal code, which of course can be amended by the council, gives us any room for maneuver with respect to these issues. Frankly, I'm not sure that it really does. Okay, it's just that it's an open issue and there's no need to really analyze it with Sarah out there and depending on the outcome, possibly resolving the implication in the issue at a constitutional level.
Okay. So if our board has objective compensation data showing that our retirement administrator or chief investment officer is materially below comparable peer cities or other pension systems, we determine that this could create a recruitment or retention risk to the system. At what point does the city's refusal to approve competitive compensation become an abuse of discretion rather than a permissible exercise of city authority?
It depends on record shows on that, how long it goes on, what the means are by which the refusal has occurred. Is it an actual exercise of discretion or is it a refusal to exercise discretion? So a court of review would look at all aspects of that.
So we want to apply a practical test that would include, did the city consider all the factors? Is there a rational connection between those factors, city's decision, and the purpose of its authority? Did the city engage in meaningful, good faith discussions with the board? Did the city give due weight to the board's specialized expertise? An explanation of operational need for those positions or the compensation increase? And if for such positions, did the city meaningfully consider the compensation necessary to recruit and retain qualified personnel? And it could ultimately, the city decision impair the effective administration benefits, investments, or other fiduciary activities.
The city is also going to, remember, the city now has a broader scope of issues to consider.
Yeah.
All the ones you mentioned are dynamite, very powerful, very important, very relevant, but there are probably a whole set of other factors that are relevant and weighty that the city can weigh in this context that could lead a reasonable decision maker to decide contrary. So I don't think we can assume that the answer necessarily is going to be the one we find most favorable. But it is clear they have to consider it. It's clear they have to review the evidence. They have to review our evidence. I assume they refer this out to their staff to analyze and then and obtain some sort of report. But there are process and substantive limitations. They just can't blow it off. That seems clear as a bell.
Okay, so with that practical test, I think if we were to apply that, historically, that would have probably filled every single aspect of that test.
And if I were their counsel, I'd be reviewing this closely and going back to their client about clarity on the rules. And now that the Cal Supreme Court seems to have rather clearly suggested are the applicable rules.
Got it. Okay. So I guess I'm just more questioning or not concerned about, but really trying to understand, when does our fiduciary responsibilities become, it's like at some point they are being overrated or the city's overstretching, overreaching, and it hinders our ability to be good fiduciaries.
I said, someone think, remember, reasonable. I don't know if Ashley agrees. When I see the word reasonable, all I think of is lawsuit. Because what one party thinks is reasonable, the other party with some reasonableness might think is unreasonable. And then who resolves that? You know who.
Yeah.
But the method of resolving it is sometimes lengthy, time consuming, expensive, and distraction from other activities. The judicial process.
It sounds like that could be the direction that, okay.
Well, yeah, I mean, I think that's a conversation for another time, but it's more, I think the way to approach this now is that we have all of those factors that you've laid out. And a way to discuss the topic that could have it be a bit of a refresh on an issue that I know has been lingering for quite a long time for you.
Next question. Yeah, I'll make sure that we're not, I don't want to move away from this item, so if I am, let me know, but how do we restart the process? And do we just need to start from scratch on the chief investment officer, reach back out, based off of this decision, or what do we need to do at this point?
And that might go beyond the agenda topic.
Okay.
Important topic though it is. Maybe agendize it for the next meeting.
Well, I'd say, I don't think it's off limits to note that you have a closed session today.
Yeah. Cool. Thank you.
The only question that I have is, the terms that I wrote down in the opinion was meaningful discussions, collaborative team, cooperative responsibility. I think that the legs that we stood on, that's okay. The legs that we stood on, I think even Russ at one point shrugged his shoulders with the pending ordinances and just, I don't know what to do. And that was for me, and having a lot of your fiduciary classes and the ethics classes, is that I always thought plenary meant plenary, and I kind of stood on the Lucera appellate decision, and it seemed that kind of flipped. And now it gave whatever, like to Caleb's point, the current city doesn't seem to want to do any of the meaningful discussions, collaborative, and the litigation that we're now in. I think it was clear to our legal team that they couldn't, short contributions, we had clear law that they couldn't do it, and now we're in litigation. So to Russ's point, the quote reasonable with the Lucera decision, it doesn't seem like the relationship is going to get any, in my opinion, is going to improve with them getting more discretionary, because before it was discretionary versus ministerial. And I think the Lucera appellate decision got it pretty clear. I thought it was going to go that way. And then it kind of, now it gives like city council, the executives, whoever they are, they have more authority to say no, because I said so. And then we can say, well, where's the collaborativeness? Where's the this? And then it just seems like the DCIO position, when it got pulled off consent, where do we go from there? So where's the disputes and processes when it gives the city more discretion and us less? It just seems like we're headed to more litigation.
I think it's important not to overstate the scope of the decision in terms of the restriction on plenary authority. Your plenary authority exists unchanged with respect to certain core aspects of your responsibilities, including the setting of contribution rates and the requirement that they be paid. So that's actually strengthened by this decision, not weakened. The issue is how you go about, how you now proceed with respect to this, the DCIO and other issues relating to compensation and classification. And there, what I'd say is the court has made very clear that there is this responsibility on both sides to collaborate and be cooperative. And so that's what I would recommend CFERS do at this point. And there will be mechanisms by which to do that. I don't think this is necessarily the place to hash out every single way in which one might do that. There is a closed session so that the boards can provide their representatives with some direction on various topics, and we can talk about that in closed session.
Lacey, anything further?
Questions from the employee side?
Not a question, just an observation on how well Ashley that did in presenting a summary of what is otherwise. I mean, I read it, but you know, I always say, I stayed at a Holiday Inn last night so that, you know, maybe I could pretend to be an attorney today. But you did a very nice job in summarizing and giving us some food for thought. And Russ, as always, thank you for your color. And I appreciate it very much. Very well done.
Okay, that will conclude D4. There's one item on the information only items. Is there any proposed agenda items for the next board meeting? Hearing none. Any unscheduled oral communications? Hearing none. Public comments? None. There are no employee personnel issues, so we'll move to J1, closed session.
We're just going to reverse the order, J1 and J2, just in case you have to leave.
Yeah, I'm gonna definitely try to hang on as much as I can, but I will be having to leave here shortly.
Yeah, that's perfect. Yeah. Unless there's no objection, we'll move to closed session J2. Employee personnel accused closed session conference with labor negotiators.